Ahead of the capital market, probably, yes, you remember all that went down previously, but they expected to resume, all things going on well today. And so for a whole lot of you who are waiting and asking how will it turn out, what shape will it take, they've been speaking up recently, but today, that's how we start off. And we're joined this morning by Zik Obi, who is a lawyer and a capital market solicitor. Thank you for coming on this morning, sir.
Thank you very much.
Well, it's interesting because you also did follow what transpired the last time out, where different shades of opinion did make the rounds at the time. But now that they're going to come back, I mean, the leadership has changed to sit and look into what really went wrong with the capital market. What do you expect with this committee now?
Thank you very much. I think that the first thing that the committee should look at is to look at what really happened all these years. And a lot did go wrong, actually. For those of us who are in the market, I'm not a stockbroker, but I'm a solicitor in the market. Okay. A lot did go wrong before the crash. So it was not as if it was unexpected. Because everyone knew, all those in the market knew that something was going wrong. And several things were going wrong. If you look at the way prices of shares were fixed at that time, you'll find that the prices were unrealistic. But nobody seemed to do anything about it. There are lots of malpractices. There was insider trading. Stockbrokers were doing what they liked. And lots of things. The other day, I listened to the chairman of a shareholders association. I think Mr. One of the shareholders association. He was talking. I think the shareholders bear a lot of responsibility for what has happened in the market.
Oh, really?
A lot. You know, they have the associations. And I do know, I used to be on a board of a bank. And also attended a couple of meetings. And I've been involved in several capital market transactions. Now, let's look at an AGM, for instance. The shareholders associations, initially there was just one or two. But there have been many since then. Because it's a lucrative business. They go to the AGM. Many of them don't ever bother to look at the accounts of the companies. Because the companies sponsor their trips. They go there, they pay the hotel, they pay all the expenses for their officials. So they go there, they position themselves at the AGMs. You bring up an account or anything. No, don't bother to read it. We've already seen it.
What about other members who are there?
They constitute the majority of those who are there. And these guys are very good. They will be at every AGM and position their members. Most of these things are done in collusion with some companies. These are all pre-planned. So you come there, if you are somebody maybe that is likely to speak against, nobody recognizes you to speak. These things we all knew were happening. So if you do not look at the accounts properly or check these things, the companies, will do what they like. So
did the regulators also know that these kind of things were going on?
To be honest with you, I would not say that they did not know. But it's one of enforcement of the rules. Because at every AGM, there will be a member of the stock exchange and SEC to monitor what was going on. What did they do to stop them?
So if now the shareholders, from the analysis that you've given, the shareholders or majority of the shareholders seem culpable because there are also a host of other shareholders who are innocent and, truly invested, genuinely were expecting returns, and were maybe a little taken aback at the fantastic way the shares were doing before it finally crashed. But if now, from what the account that you've given, some shareholders are culpable, can they actually expect any mercy from this particular hearing?
Well, this is why it's important to really go deep into this hearing. Let all that happened be exposed. It's very important, otherwise we won't get anywhere. It's not enough to blame the regulator only. Everybody who has been involved in one way or the other ought to be identified. And this thing happens in the market. In companies, the directors, there are a lot of insider dealings. I do know that before the shares go to the market, sometimes the prices are overbloated, and you go there, you buy them. A few weeks after it goes to the market, the prices crash.
You know, the problem that we might encounter, that is why it's good that we're looking at this this morning, is for this new committee not to be labeled a witch hunting committee. So for them to really go all out and do something that won't be selective, an all-encompassing kind of probe, how can they go about that? Which and where should they be looking at? Because now you just brought in another angle, which is the shareholders. Some are also looking at the regulatory bodies. Some are also looking at some other interested parties in all of this. Where should we concentrate on as we resume another probe today?
Well, I think that they need to avoid what happened the last time. The best thing is to call all those in the markets to come and say what they know about what has gone wrong and what needs to be done to move forward. Listen to everybody who would want to contribute. Don't start as if you're already indicting somebody or you are witch hunting somebody. The probe is supposed to be a fact-finding exercise. Let us get all the facts. If you throw it open that way, people will be willing to come and say what they know. We're not trying to indict anybody or destroy anybody. After all, SEC is happy with the probe. They said they want hearing done. I don't, if there's anybody in SEC who has done anything wrong, by all means, let's penalize him or her.
So, do you think that there's going to be any overhanging remnants from the last probe? You know, that sticking with this new probe, do you think they still have to contend with some issues that did not quite end with the last probe?
Well, it's a problem. I mean, they all belong to the same House of Representatives. But if we go by what the new chairman has said, he said that they will approach this exercise with an open mind and try to get to the root of the matter. I think it's in their interest and in the interest of everybody, whether in the market or outside the market, to really go there and sit down, begin the investigation. We all saw what happened at the subsidy probe panel. It was very open. People came out. And you need to have a good chairman, a chairman who understands what it's all about, what it's going to do. The only difference is that I don't know what expertise the current committee has, because it's important.
Really? How important is that?
You must understand the operations of a capital market. If you don't know about the capital market, and the few things I said, you wouldn't know the right questions to ask.
But sometimes, I mean, as an ordinary shareholder, how much do you really need to know about the capital market before you're able to ask, say, competent questions?
No. Well, the ordinary shareholder, obviously, one doesn't expect him to be an expert in the market. I mean, you just know basic things about what you need to do, how to invest your money, and how the stock market operates. There has not been a lot of investor education in the past. I do know that right now, there's a committee working on that to try to educate the investor on what they should know about the market. In fact, the rules, they're also thinking of writing out the rules in simple language so that people can understand. But for the committee trying to do the investigation, you need to understand some of the intricacies of the market. Let me give you an example. Yeah. For instance, the professionals. It is not every lawyer that can act as a solicitor in the capital market. You have to be registered with SEC. The reason for that is they want to be sure that you understand, for instance, the Investment and Securities Act, the rules, not necessarily the capital, the stock market operations, but as a lawyer, you must understand the laws that guide the capital market and the rules. If you don't, you will not be allowed to participate in any capital market transaction. So for a committee trying to find out, you are trying to deal with experts. It's important, even if you are the chairman, does not know that or doesn't have the requisite qualification. It's not, like I say, it's not enough to be a lawyer. You can also employ consultants who can help you do this job. I'm not saying that the chairman must be a capital market operator.
That's why there's a committee.
Exactly, but consultants are there. Even if you have, I have looked at the list of members of the committee. I think there are about 2 lawyers. One is did corporate law or commercial law.
The earlier group had a group of consultants as well.
Well, unfortunately, they boggled the whole thing. Right from day 1, day 2, day 3, it's like they're already drawing conclusions. They have not made an investigation. There has been no investigation whatsoever by the...
Or is it that it didn't come across as though there was any investigation? Because they said they had information.
To be honest with you, it's when you start with trying to find out the internal administrative problems of SEC.
Should that even come up, or it should come up at a certain time?
Precisely towards the end, you do the main job. And the main job that you've been set up to do is to find out why the capital market had the problem that it had. What is being done to remedy that situation? What SEC is doing now, are they enough? If they're not enough, what, you see this kind of probe, other members of the public can give or make contributions that even we in the market may not know, but we listen to everybody. You check whether the rules are adequate, whether the laws are adequate. So if there are lapses anywhere, you try to plug them.
From the example that you've given about this shareholders association, it is a worrisome trend. Do you think that it should be disbanded?
Well, I don't think that they should be disbanded. It's just that they should be regulated. I do know that in the current Code of Corporate Governance issued released last year, there have been attempts at regulating all this. I do know that in our subcommittee meetings, we've talked about this idea of having the correct regulatory staff go to an AGM or go to a competition board meeting so that you ensure that the things are done properly. That's their job. If the company has not met those requirements, by all means, stop the exercise. You know, at a competition board meeting, that is where you have the final meeting to approve the share offering. If one of the parties refuse to sign the document, it can go on. If they are not satisfied, let's say the solicitor says, I am not satisfied that all the legal requirements have been met, and says he will not sign the document. You cannot present that document anywhere. The same thing with the accountants and the rest of them. There was a year, this was in the early 80s, one public offer, the reporting accountants disagreed with the accounts provided by the auditors. Maybe the basis, I think it was the profit forecast or something like that. There were attempts to see how we could remedy that situation, but the reporting accountant said no. That as far as his professional competence is concerned, he will not approve it. And that exercise was called off. This was many years ago. I don't know, since then, I don't know how many have been called off for such reasons. Again, part of the problem here is, in the past, when there's a public offer, for instance, the company appoints its own solicitor, appoints its own auditor. Now, it is the job of the issuing house to appoint the reporting accountant and appoint the solicitor to the offer. These two officers are supposed to advise the issuing house and also protect the interest of the investor. Their duty is to make sure that whatever the company is presenting is in accordance with the law, has been done properly. But in the last couple of years, what has been happening is that when it's time for appointment, because the company pays the fees for everybody. Now,
pays the issuing house, pays the
issuing house, pays all the advisors, because it's part of the cost. Now, many of them insist on nominating who will also act as a solicitor to the offer.
They also insist on reporting
an accountant.
These are not too good.
Of course not. Of course not.
And
Of course not.
These are some of the issues people say should be looked into, some kind of insider dealings
Exactly.
that shouldn't even be in the first place.
Exactly.
But again, basically, as they meet, everyone is like trying to see how you can really, Marco was asking that question, how you can really cut yourself off that, should I say, stigma or kind of bad name, which we saw, because it was a very bad incident we saw with the first panel on both sides, the regulatory body as well as the panel that was disbanded. Now we're getting set for a fresh new one today, and everyone says, is there any likelihood that some people would think that someone somewhere actually came all out to smear their name, and that could as well affect their clear conscience in having some kind of professional dealings at the end of the day?
Well, I think everything depends on the way the committee sets out to do its work. And I believe, from what has happened and from what has been written and said, I believe that the committee can do a good job. Let them forget what has happened. The issues are very clear. Let them call for evidence or testimony of what people think is what happened.
From what category of persons would you expect to come?
They advertise. They are, first of all, they are trade groups. They are trade groups in the market.
Okay.
Yeah, for instance, they're the solicitors group. The solicitors have an association called the Capital Market Solicitors Association. You have the association of issuing houses. You have the stockbrokers. You have all these associations. Each and every one of them, I believe from the list that we saw, each one has been invited to come and say what it knows about it. Now, even the investors, the association, the shareholder associations, each person should go there and say, and they ask questions. If there are documents, confront them with those documents. But I do know that a lot has been done in the last 2 years.
Should this be behind closed doors?
Oh, that's a good question, because the part of I believe that some aspects of the testimony should be behind closed doors. Some aspects.
Like what aspect?
There are certain. Well, it depends on what one wants to say. There are certain things you may want to say that if members of the public hear, and they would say, oh, no.
What if it's the truth? Because it concerns their money.
Yes, I know. It is the truth, all right. But we don't want to destroy the market. We are trying to see how we can salvage what has...
But, that's very, because, Chamberlain, just before you asked that question, I was thinking about what exactly the fate of the markets will be while this probe is going on. But be that as it may, someone might also want to use the analogy of a patient who is very sick. If a patient is very ill, doesn't it behove the doctor to tell that patient just how critically ill you are, so you can prepare your mind, and at that particular point you can either pray that you get better, or if it gets worse, you know that okay, your house has been put in order and you're willing to go, you're ready to go, as it were. Don't you think that same approach should come to the capital market probe?
Well, you can tell the patient in the room there, quietly, or just with him and the relations, this is the position. But you see, capital market, you take the wrong step, it affects the market immediately. Prices go down, loss of confidence.
Can it get any worse than it already is?
It could, you never know. You see, once people decide that there's something seriously wrong, I'm not saying that anything should be swept under the carpet, no. But it's just that we have to be careful and balance it well. It's difficult to determine now, this is what you say to the public, this is what you don't. But I think that as they want to testify, just like the courts do sometimes, there are certain evidence you give, you say, please, we want to give this thing in camera.
Okay.
So that you help save the market.
But you know how it also works. People will be looking for not just what they're saying, but what they're not saying. Lots of investors will be keeping a very close watch on this one, and you could make a statement which you think is just an innocent statement, and people read minutes into all of this and make up their minds about them.
I agree. But the ones that are over, everything really depends, because if for instance I was going there to testify, assuming I was a regulator, I could ask for permission to say a few things without the public or without the cameras beaming it, because I know that there are sensitive information that may cause some problems. And the chairman should be able to understand that. But it is not that everything has to be said behind the camera. No.
Well, the chairman would also require a very good sense of judgment to be able to know what should be said in private and what should be said in public, if anything is
I agree. That is part of why I say that it's important that he also understands the intricacies of the capital market or has a very good consultant who advises him. But I think that generally, I think I'm for an open investigation or inquiry, but one has to be very, very careful. Let me add to that. A lot has been done in the last 2 years in trying to plug most of these loopholes that we've had. There has been the Code of Corporate Governance, which is now beginning to deal with the role of even auditors. Now, there's no auditor that will stay there for more than a limited number of years. Formerly, an auditor could stay there for years. Nobody changes him. But now, they now want a fixed term for every auditor. You go, somebody else comes in. You guys remember what happened to Cadbury? I don't know if you don't know. Cadbury had a problem. They've been presenting their accounts for years. Then suddenly, I think it was in 2008 or thereabout, after the problems on the capital market came, and they decided to look at the accounts of the company. And there were lots of irregularities discovered. And the directors were fined or banned from holding positions. The auditors were fined. The registrars were fined. The senior management staff were fined. Where were the shareholders association? They were there. You see, because they don't look at these accounts properly.
All right, but are you optimistic that at the end of the day, this probe will correct a whole lot of things that has gone wrong?
Well, if well handled, yes. I think that if the probe looks at what the current administration of SEC is doing, because for me, it's for them to look at what happened in the past with a view to solving the problem in the future, looking at what the current administration has done, how effective they are, the chances of their success, and if there's something to add, you add. But I believe that from what I have seen so far, from what the current DG is doing, the current administration of SEC is doing, I think that they seem to appreciate what the problems have been, and would hope that once in the next few years or so, and these things come in, I think there'll be an improvement in the capital markets.
But should need be, they should take radical steps if it calls for it.
Oh,
should
yes.
they be afraid to take it?
No. Because from what we've seen so far, and from every day we go to the capital market committee meeting, and you need to see what steps are being taken. Look at the committees that have been appointed. They just set up about 7 capital market subcommittees dealing with critical areas of the capital market.